I'll give you another example. The name of this client is Brian's 24. They are a 24-hour diner located in downtown San Diego.
Brian's 24.
Brian's 24, yes, for 24 hours. So what's unique about them, obviously, is that they're open 24 hours a day, which creates some challenges because they're basically always open, always staffed. It's a family-run business. They do a fair amount of volume. Their restaurant itself isn't that large, but the fact that they're open all day makes up for it.
Where are they located?
They're in downtown San Diego in the Gaslamp district. Now
there's a prime location.
Right. So they're downtown. A lot of their traffic is from the bars, right? So the bars get out at 1:30 or 2. A lot of people go over there for food. Their food's really good, kind of higher end diner food, so it's more gourmet. So it's probably appealing to a lot of people as opposed to kind of a lower end meal. When they actually found us, they were working with their attorney who does taxes as well, but he's not really a tax person and didn't really have restaurant experience, so that's why they were looking for a new relationship. He had missed a few things. What's big for a lot of restaurant owners is called a FICA Tax Tip Credit.
I didn't quite catch that. Say again.
It's called a FICA, F-I-C-A Tax Tip Credit. So what that basically means is your employees are supposed to claim their tips that they receive from the restaurant. And so what happens when you report these tips to payroll, the employer pays the payroll tax, typically 7.5% roughly of the wages that they pay. In order to kind of encourage restaurant owners to be compliant with this, they provide a tax credit for the restaurant owner. And so by reporting this and paying the tax on the tips, they actually get a tax credit back, which is actually more advantageous to them because a tax credit is a dollar-for-dollar reduction in tax instead of just a tax deduction. Some of these numbers are quite substantial. It can equate to thousands of dollars of reduction in taxes for restaurant owners. Their prior accountant wasn't aware of that attorney, so he never filed that. And so one of the things that we did, we amended prior year returns and generated thousands of dollars in FICA tax tip credits for her. She got refunds back and didn't owe any tax, and so it was a good deal. So that was kind of one thing that's very specific to restaurants to be aware of, because a lot of people, if they're doing their tax returns themselves or just working with somebody who's not really knowledgeable about that, it often gets missed. And so it's a valuable item to be aware of. And the other big issue with restaurants too is tip reporting. That's something that they're really trying to increase the compliance on. There's a new form that they came out with a few years ago called a Form 8027. And so what they're looking for is restaurants that have 10 or more employees. They'll determine them to be a large establishment in terms of reporting tips. And so they'll want to see the restaurant owner file that form on an annual basis, showing all the tips that have come in through the business, breaking out cash tips from credit card tips, and they're looking for an overall relationship in the percentage of the tips being reported. If they see, okay, well, credit card tips are at 12% and cash tips are at 2%, that's going to be a red flag, right, that they're not reporting all their cash tips. So essentially that form is designed to make sure that restaurants are in compliance with tip reporting and that the tips are being properly reported on the W-2s and the pay stubs of their employees. As far as this specific client, after we helped them with that issue, they'd been using QuickBooks to do their bookkeeping. It was messed up. Didn't tie back to their tax returns. Their balance sheet didn't balance to the tax return. Their assets were different. One of the first things we did was a cleanup project where we basically cleaned up the QuickBooks file, amended prior tax returns to get it all back in line. Going forward, what we do with them is we do more of a monthly review of their QuickBooks files. They actually do all their accounting internally. They'll post their weekly sales. They'll input bills into QuickBooks and pay bills. They have a on-site bookkeeper that does that. But we view everything every month. We do some journal entries to make sure the payroll's being properly accrued, and we do some other month-end journal entries to make sure that the financial statements have meaning behind them. And then typically on a quarterly basis, we'll meet with the client, just review the financials and go over questions that they have relative to the business and things that we see. So that's kind of how we work with them. Kind of everything's customized, right? So it's kind of case by case. And I'd say that's kind of the second level of service that we provide. The first restaurant, level 1, they're level 2, where we're doing more for review. kind of almost being like an outsourced CFO, just making sure that everything's being handled correctly on the accounting side.
What revenue category are they in?
I'd say $3 million.